Vinod, so far have we discussed about human and physical resources required for FPOs to undertake agribusiness. In the present session, we will try to understand about the financial resource for business of FPOs.
Sarla, this is an important aspect that I would like to learn for financial planning of my own FPO.
Good, Vinod. Let's discuss this. First of all, can you tell me for what purposes FPOs need financial resources?
Sarla, as far as I know, FPOs need financial resources for twin purposes. First, they need to invest in longer term assets such as land, building, machinery, etc. And second, they need to invest in regular business operations such as for buying raw materials, repairs and maintenance, salaries of staff, rent, electricity, etc.
Vinod, experiences shows that availability of financial resources with FPO will determine the volume and growth of its business. Therefore, planning of financial resource is an important aspect of business development process of FPO, which is defined in following manner. Financial planning is the task of determining how a business will afford to achieve its strategic goals and objectives. Usually, a company creates a financial plan immediately after the vision and objectives have been set. The financial plan describes each of the activities, resources, equipment, and materials that are needed to achieve these objectives as well as the time frames involved.
Oh, I see. Financial planning is so important for FPO business. Can you explain me what kind of financial resources are needed for FPO?
Okay, I start from what you have mentioned earlier. For starting and running the agribusiness, a FPO has to invest in land, plant, machinery, which is one time investment. It also needs to spend on raw materials, payments for wages, salaries, etc., which requires capital regularly. From here, we can see that the capital requirement for a FPO are of two types. Capital that is required to create long-term assets is called fixed capital. Capital that is required regularly for business operations and also change with change in business volume is called working capital.
This is very useful, Sarla. Can you explain this in more detail?
First, let us understand the concept of fixed capital in the context of FPO. As we have discussed, to plan and run the business, a FPO requires assets such as land, building, machinery, etc. The fixed capital is used to create physical infrastructure facilities which become fixed assets for the FPO. These fixed assets are for long term use and cannot be converted quickly into cash. The value of fixed asset will get depreciated, means reduction of value of asset over time.
Sarla, can you please explain how the assessment of fixed capital requirement is done with example of a FPO?
Now we will learn to assess the fixed capital requirement for FPO. For this, we will again take example of Samarth Farmer Producer Company Limited, which is engaged in three agri businesses that are input supply, seed production and output sale. So let's put all the fixed assets and their economic value in this table. This gives us estimation of capital requirement for fixed assets for business of Samarth FPO.
Sarla, you have explained the concept of fixed capital and its estimation process for FPO business very well. Similarly, please explain about working capital.
Sure, Vinod. So first, let us understand the concept of working capital. In simple words, working capital is a fund needed for meeting expenses towards day to day operations of FPO business. Working capital can be used for purchase of agri inputs such as seeds, fertilizers, pesticides, etc., and purchase of raw material. In addition, expenses incurred for meeting labor, processing, packaging, transportation, office and godown rent, electricity, staff salary, legal expenses, training cost, etc. will also come under working capital. Vinod, within working capital, there is also net working capital, which is defined as a difference between current assets and current liabilities. Means net working capital is equal to current assets minus current liabilities. Here we can further discuss about current assets and liabilities, which are defined as current assets are those assets which are held in the form of cash or can be converted into cash within a year. Example: cash, inventories, payment to be received from debtors, etc. Current liabilities are debts or obligations that are due within 1 year or within normal operating cycle. Example: wages payable, income tax, interest, and other unpaid expenses, etc.
Sarla, it seems that the quantum of working capital for FPO varies from time to time, depending upon its business cycle. Could you explain me what are the factors that determine the amount of working capital?
This is very important aspect to understand about working capital. Vinod, there are many factors which determine the amount of working capital for FPO. Some of them are like nature and size of the agri business, operating cycle, seasonal fluctuations, production policy, credit policy, availability of credit facility, growth and expansion, price changes.
Sarla, I could see that there are so many factors which affect working capital requirement for FPO business. And we should keep in mind all these factors while estimation of working capital requirement for the business. Now, can you explain in detail about the process of estimation of working capital requirement?
Sure, Vinod. This we try to understand from the example of Samarth FPO again. You see the table which gives details of working capital need for different activities such as input supply, seed production, and output marketing of Samarth for a year. Vinod, what did you get from the example? Could you figure out how working capital requirement is estimated for different activities?
Yes, Sarla. I could learn from the example about estimating working capital requirement for FPO business. I'll do the same for my FPO using this template.
Vinod, let's proceed our discussions. We understood about fixed capital and working capital so far. Now, I would explain you about the key differences between fixed and working capital. Fixed capital is invested in long-term assets. Working capital is invested in current assets. Fixed capital is required before the business starts. Working capital is required as the business gets started.
Sarla, you have explained the difference between these two capitals precisely. I got the key difference very well.
Great, Vinod. Can you summarize the key learnings of the session?
Yes, it try to summarize. Fixed capital and working capital have an important role in the functioning of a FPO, while fixed capital creates permanent assets for running business. Working capital is required for day-to-day business operations of a FPO. Appropriate management of working capital ensure smooth functioning of FPO business.